Hello, good afternoon and welcome to Business 101. And my name is Vladimir Kim. Business 101 is that program that gives indicative on fundamentals, sometimes pioneering different thoughts, especially when a new policy comes up. And it will be part of a conversation today. Our conversation today will center around Nigeria's new crude oil grade hitting international market. We'll also get to talk about the Executive Order 9 from the presidency that mandates that all oil revenue, especially the profits from oil revenue, should be taken straight. Remittances should be done to the federal account instead of using intermediaries like the NMPC, and also that concerns other agencies. It will be a conversation, but first we start looking at the new crude oil grade hitting international market this March. The Nigerian National Petroleum Company Limited, NMPC, is set to start exporting a new light sweet crude grade called cotton from March, adding to a recent recovery in output from the country. The launch is part of Nigeria's broader push to lift production, long constrained by unrest and crude theft, and follows the introduction of two other new grades since 2024. Nigeria, already pumping close to its OPEC quota, is among the countries seeking a higher target within the producer group. Cotton crude, which is due to be exported in the third week of March, according to report, has an API gravity of 36.4 and making it similar in quality to Nigeria's Bonilite, valued for its high yield of gasoline and diesel. The NMPC last week issued a tender for the grade for March 24th to 25th, according to Traders Outlook. The grade is expected to be exported through the floating storage and offloading vessel Cotton, analysts at Kepler said in a note, which has a capacity of 2.2 million barrels and aims to boost crude oil transportation and production from oil mining lease 18 and surrounding assets in the country's eastern Niger Delta. Based on the vessel's storage constraint, Cotton could lift Nigeria's crude and condensate supply from roughly 1.65 million barrels per day currently to around 1.7 million barrels per day for the rest of the year. Nigeria's OPEC Plus crude output quota is 1.5 million barrels per day, and the country pumped 1.48 million barrels per day in January based on OPEC data. Other grades Nigeria has launched in recent years include Obodo in 2025 and Otapete in 2024, even Nembe in 2024. Still in the context of the oil sector, fresh questions and concerns and uncertainty have deepened at the oil and gas agencies affected by the wake of President Bola Tinubu's new executive order directing immediate reallocation of oil and gas revenues to the Federation account for onward distribution among three tiers of governments. According to reports, the directive, which effectively halts the retention of certain internally generated revenues by agencies in the sector, has sparked deep concerns within the Nigerian Upstream Petroleum Regulatory Commission (NUPRC) and the Nigerian National Petroleum Company Limited, and the board and management of the Midstream and Downstream Gas Infrastructure Fund. The uncertainty, according to industry operators and experts, centers on the absence of clearly defined alternative funding model for the Nigerian Upstream Petroleum Regulatory Commission (NUPRC) to meet its statutory obligation following the reallocation of oil and gas royalties to the Federation accounts. They also rejected a possible solution of conventional budgetary funding and approval through the National Assembly, insisting that such a move would undermine NUPRC's operational independence and efficiency. And this would center around a conversation today where we look at the indices around first the new crude grade for Nigeria, and afterwards we'll also talk about the new executive order from the president. It's been a conversation all through the week, just as my guest is standing by. But first we'll go on a quick break, and when we're back, we'll go into the conversation proper with my guest. Don't go anywhere. and welcome back to show Business 101. My name is Vladimir Kim. And now to the conversation proper, looking at the context within Nigeria, talking about the new grade Nigeria has added to its market, the carton grade, which could propel Nigeria's operational status, production status, and the oil sector, which could move even further to 1.7 million barrels per day. And similarly, we'll also look at the new executive law from the president amid the PRA Act, which has brought constraint from different angles. Many people are for, others are against, in particular looking at all the remuneration and the profits coming from the oil sector, which previously was within the coffers of the NMPC, would be sent. Remittances will be done directly to the Federation's accounts. And now my guest joins the conversation, Dr. Wisdom Enang, an energy expert, in fact, a senior energy expert in his own regard. Dr. Wisdom Enang, good morning. So good afternoon. So good to have you be part of Business 101 today.
Hi, good morning. Thank you very much. It's a pleasure. Good afternoon.
Good afternoon. Always exciting time having this conversation with you. First, let's talk about the new grade that's been added to Nigeria's grades. In 2024, we saw the different grades, more coming, even the number grades are joining and improving Nigeria's quota in terms of production quota. And now a new grade, the carton grade, which also will be traded and exported by March 24th, 25th, according to reports we're having. How exciting are you about this particular one, and what can this add to Nigeria's production quota and in turn economy?
All right, thank you very much. I think basically this development is going to be in favor of Nigerians. It means that we are a step closer to meeting our OPEC quota. It also means that there's more money coming into the coffers. So, on overall, it signals a renewed, assertion of, interest in Nigerians' oil and gas economy. It also means that at this particular point in time, that Nigeria has demonstrated that they are willing to be able to add new volumes to their current production. So I think if you superimpose that side by side, the level of investment interest, you can only know that the short, the medium, and long-term future for Nigeria is really bright.
The short-term, medium, and long-term future for Nigeria seem very bright. A quick squeezing into this one would be the projection that Nigeria is having. According to reports we're hearing, we hear that Nigeria is speculating or projecting, not speculating, but projecting to be able to meet about 3 million barrels per day in 2030. All of these development, is it a good pointer of a possibility of that being achieved? 3 million barrels per day. In fact, according to reports we're hearing, Nigeria seems to be ready to tell OPEC to increase their OPEC quota moving forward. Last month, Nigeria was so close to meeting the target of 1.5 million barrels per day. But a projection of reaching 3 million barrels per day in 2030, that feasible for you?
Yeah, it is feasible, but I think we need to be cognizant of different factors. Number one is the fact that we have been able to achieve what we've achieved by virtue of actually solving things like the crude oil theft concern. Now that number has dropped all the way from about 50,000 barrels per day or even more to about 5,000 now. So that's a good one. But we do need to bring on stream the new fields. We do also need to, work on the integrity of our existing assets so that we can be able to enhance the current production from the existing field. So I'm going to tell you what the imperatives are and what the, one of the areas of concern is. Now, you're well aware that we have Executive Order 9 of 2026, which the president has recently signed. And that, in a nutshell, takes out the funds that were earmarked for exploration by virtue of 30% of the, the profit oil and gas as well. The other one is the 30% that was part of the management fee of NMPCL, which we do know that, with the benefit of hindsight, that 30% was actually used for expansion of oil and gas productions. Right now, we're routing it through into the central appropriation account. And the biggest worry is this: we might subject expansion activities in the oil and gas, the oil and gas field, as well as development activities to bureaucracy. That's number one concern. And so we would need to have maybe a special corporate entity or a special regulator that would oversee the planning of those explorations, and then money needs to be earmarked for them. And I'm telling you some of the imperatives that we need. Otherwise, we may be having wishful thinking on our hands, where we're thinking we're going to get up to 3, but because of the bureaucratic challenges across, the value chain, given the current executive order, it may be a big concern for us. But the other thing is that we need to create the right fiscal incentives to support the exploration of the fields that we're looking at, and to even support investors to stay within. On that note, I think the government is doing a lot because, for example, before this government came into power, we saw Shell divest their assets, and we were worried because that was going to be maybe the beginning of the total divestments from the country. But I think with what this government has done, with all of those presidential directives on oil and gas reforms and the fiscal incentives, we now see Shell renewing their commitment with the Bonga Southwest and the Bonga North as well. The other thing is that we also see a renewed interest in this current administration to be able to give very project-specific fiscal incentives to create a very competitive, compelling project fiscal for each of those projects. So I think that has been done for Bonga North. So to be honest, I'm very, very optimistic, but I have a cautious optimism, of course, subject to what some of these factors that we really need to critically look into.
Okay, Doctor, and a good perspective there. You've taken a conversation even further to the next level, which we have to talk about. It would be about the remittances change that's taking place, the Executive Order 9, 2026 from the President that demands that all profits accrued from the NMPC and other regulatory bodies should be paid directly into the Federation's account. And many have spoken about the positives from your earlier conversation you've made. I can already picture probably where you stand at. You've mentioned the concerns that the bureaucracy being part of it. And let me start by asking what you make of this particular executive order. I listened to you talk about it all through the media. There are pros and cons in it. What do you make of it overall? Are you with it or against?
Well, I mean, I'm on the side of cautious optimism. And like I always say, I'm balancing what the short-term impacts could be and the long-term benefits. So on the long term, everyone is aligned. It's going to give us a lot more clarity on our expenses. There's going to be discipline. And then, of course, it would block all the leakages. That's on the long term, and that is if it's well executed. But like every doctor would worry about, the long-term benefits and, of course, the short-term side effects, if not well administered for any medication, I'm pretty worried about those things that could become the shortcomings of that particular executive order, which I have listed out. So my position is it's going to be a very good benefit in the long term, but I'm thinking critically, how do we implement? And more so, how do we manage the investor sentiment? Because a lot of investors are pretty worried about the use of executive order for making such major changes. They believe that major changes of that nature should be subject to legislative processes where stakeholders are involved. So, like I said, we still have a window that is open, which is the fact that we're currently not ring-fencing, that exploration side of things and the expansion side of things. The whole idea of domiciling those funds with the NMPCL was to create a ring fence where those priorities will be taken care of, and we will not have to go through lengthy processes of appropriation for those priorities. And also, there will be a ring fencing so they don't have to compete with other fiscal priorities that the nation has. And so we'll keep having expansion of those particular priorities. But right now, we do have ourselves up against two possibilities. Number one, that there's going to be a more lengthy process of, those projects going through appropriation and budgeting the normal way every other thing goes through. And it also depends on the priorities and the sentiments of the government of the day. That's our concern. What if the government of the day is not really concerned about exploration? Number two challenge that comes to mind is the fact that the government could decide to say all projects should compete for investments, private equity and risk-sharing investments. But the worry about that is currently the cost of production in Nigeria is quite high. And that has been a challenge versus other jurisdictions. And that has been a challenge when it comes to attracting investments. So do we have the right project economics to be able to compete for exploration funds vis-a-vis what is going on in other climes without necessarily relying on the provision of certain funds that have been put aside or earmarked by the government for that purpose? Can we do it as a purely economic activity? Do we have the mature project physicals to be able to achieve that? So those are the concerns that I'm worried about, that we don't go in and then we're trying to explore conventional economics of making project-specific assessment for investment attraction, and then we lose out because we're not competitive enough. So I'm trying to think, are we really ready to be able to deploy a free market system for project assessment and, project funding, applications and all of that?
All right, a big question you've given there. If Nigeria seems ready for all of these changes, especially from investment point of view, you've spoken about the executive order. Is it what's remarkable when you look about investors look at the market and they think to themselves, is that a sense of stability or not? But let's look at one problem for me in all of this. I looked at 2024, how much was spent within the NNPC, and we're talking about NUPRC. We had, based on salary, the expenditure was so high, about 88 billion naira in that regard going forward, and looking at the amounts that was acquired within that period, about 322 billion naira also they generated, looking at the share that they have to keep. And the concern is now all the money goes to the federal account, and federal government has to handle all of this alongside. Talk to us about how difficult first to meet the demands of these commissions, NUPRC and NNPC, and secondly the running of these commissions, because I look at the original Petroleum Industry Act 2021 framework. Initially it was that the provisions of the act demanded 30% management fee and retained by NNPC Limited for its operation. And we're talking about 30% Frontier Exploration Fund allocated to NNPC for hydrocarbon exploration in inland basins like the Chad and Sokoto basins, and 40% a federation account. This one goes to the federal government. And now everything goes to the federal government account, and we have to go through that processes, more like budgeting for these commissions. How demanding and how serious is this?
Basically, I think we're going to go through a lengthy process of appropriation, like you've said, and that depends partially now on the inclination or the bias of the leader, the president of the time. Now, I can tell you without a doubt that this current president is very much interested in ensuring that we do have that sector going on well. So I'm not very worried now and within the next 5 years. But however, I am pretty worried about the way things have been arranged, about the sustainability of that when we have a president perhaps who is more interested in agriculture, or we have a president who is more interested in tourism. So, but for now, I think we have a leader who has that sector at heart. And so we are very convinced that there will be a grandfathering of that sector in all the policies that will be done. So I don't expect a problem from an execution and implementation standpoint. But going into perhaps Another administration, I don't know if the same priority will allow for prompt and well-intended consideration of the oil and gas sector when it comes to budgeting for the running of those, those institutions, as well as making sure that there are no challenges to the sector itself. Recall that under the Buhari administration, or even before then, there was a lot of debt in that sector, a lot of cash call, obligations were not met. And, when Buhari came, he cleared a substantial amount, and now I think most of it has been cleared. So you see that what happens in the sector at any point in time depends on the inclination of the leader on board. So we're just hoping that we can stitch this one into the regulatory provisions. That means that whether it be this particular administration or the next administration, that would always be a priority to maintain the executive order provisions as being intended, because, of course, it's been now enshrined at that point in time into the law.
All right, Dr. Wisdom Adang, before we close, because we're ticking to the time, one last question for you. Many have looked at the perception of NNPC, and it seemed to be at a bad light, coupled with the fact that over the years, we've talked about remittances that have come from the NNPC to the government. And we can also look at the positives from a government point of view in terms of FX supply that's coming in and the ability to close the loopholes. Basically, that's why government is doing this. And now, let's look at the position of NNPC, NUPRC, moving forward from here. What changes for them? What changes for them? There are regulatory bodies of some sort. What are we expecting from them now, considering the fact that all the money goes to the federal government and their activity is being controlled by the federal government? Is this a moment where we see a better NNPC outlook? Many have also argued NNPC should be privatized. All the joint procedures that they've had with international companies are probably totally suspended, and it becomes just a public company instead of being co-owned by government. What are your thoughts? What do you share within this?
Well, I think NNPCL has already been listed as a private company meant to operate less as an interventionist, corporate, but more, and of course, they've now been stripped of the, money retention role on behalf of the federal government. But that, in a way, allows them to be able to operate on the basis of profitability. It means that the profits they now, they now report going forward is going to be based on the activities that they undertake and the decisions that they take and how well they do it, but less based on statutory deductions. So we're going to see a very independent NNPCL, and that is what the PIA had intended, that NNPCL step down from interventionist role, operate like a national oil and gas company on the basis of profitability, which will support investments into that, corporation. And I think the president is slowly unwinding the, the clock when it comes to how well the NNPCL are getting on that path of transition between the interventionist role and the role of a profitable corporate entity. And you also need to understand that the NNPCL have made several commitments, I think within the next year and a half or thereabout, that they will be transitioning into being listed on the stock exchange market. And you cannot do that if you're still reporting profits that are more like windfall profits from, statutory deductions. So I think at this point in time, everything is working the way the Petroleum Industry Act had intended for.
All right, Dr. Wisdom, and before I say the big thank you, the biggest gain of the Executive Order 9, what is the biggest gain of this? In 30 seconds, just share that with us. What do you think is the biggest gain for this?
Right, less than 30 seconds. I'd like to say that the Executive Order 9 is basically a governance, revenue governance reset, more like plumbing all our revenues directly to the central account to avoid leakages. But in no way is it going to incentivize any production increase we would need to marry this particular executive order with other executive orders to be able to plug the the earnings that we have to make sure there are no losses, but at the same time be able to increase our production ultimately.
Thank you, Dr. Wisdom Enang. Fantastic thought you've given us and good perspective regarding the executive order and the implication of it and the quest for implementation in the long run. Thank you very much for being a part of the conversation this afternoon.
Thank you very much. Enjoy the rest of your day.
God bless. Fantastic thought there, Dr. Wisdom Enang, always being the man to share good ideas regarding what is happening in the energy sector and the petroleum sector as a whole. But we have to draw the curtain here. Time is out. Tomorrow is another for Business Outlook, and the coming weeks we're going to talk more about the oil sector and what's happening in the upstream and the downstream for Nigeria's oil and gas sector. Thank you very much for being a part of it. My name is Bladen Lukem. Thank you for watching.